Yo, what is up, everyone? My name is Dom, and we're talking about unusual options activity. Alright, let's kick it off with the disclaimer. So, disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. Alright, everyone. First one I want to bring up today is EQT. Now, this is a energy company. They had earnings this morning. I think they posted earnings of 30 cents a share, which beat the estimate of 26 cents. As you can see here, the stock did not really move a whole lot. It looks like the high of the day was only about 6 cents above the closing price here. It looks like it opened lower actually on the day. So yeah, I want to talk about what I see down here in the time of sales. Now, if you go to these January 2022 options and these January 2023 options, you will see some outstanding volume right here and here. 25,000 contracts traded, 50,000 contracts traded. Now, when I look at this immediately and I see that this January 2022 5-strike call, so these are obviously a part of a spread here. You know, I'm not sure when Thinkorswim came out with this here, but you know, these two orders here are at 11:30, and as you can see here, both of these two say spread. I don't know when they came out with that, if I've been missing that for a while, but that's what I've been thinking all along. You know, this order was placed together. Same with this one at 10:40 a.m. Same with this one at 11:30 a.m. Now, what I think is going on here is if you look at this January 2022 calls here, 25,000 contracts traded, open interest of about 25,000. So, you know, this volume and open interest is virtually identical. Virtually identical, 9 contracts away. Now, looks like they're selling these January 2022 5-strike calls and they're buying these January 2023 25-strike calls. If you look at these 2023 calls, huge volume, 50,000 contracts traded, open interest of only about 136 contracts. Now, you're probably wondering why I'm explaining all this, going into this much detail. Now, I'm going into this much detail because I think what they're doing here is they're selling to close these 2022 contracts, and I am speculating that until we check this in the morning and can confirm that these 25,000 contracts are now erased from the open interest because they're closing the position. So these 25,000 contracts, I'm speculating, are going to be removed from this open interest come tomorrow morning because open interest updates every single day. Now, what I think they're doing here is they're selling to close these January 2022 5-strike calls, and they're buying to open these 2023 25-strike calls. Sorry, I meant to say they're closing the January 2022 5-strike calls, and they're opening a position in the 2022 25-strike calls. Now, so what they're doing is they had a position in the 2022 calls. So they bought those, I don't know when, but I think they're selling to close the 5-strike calls, and they're rolling up and they're buying the 25-strike calls. So they're taking the profit off the table that they had in the 5-strike calls, and then they're taking that profit and they're rolling it into the 25-strike calls. So they're selling to close the 2022 5-strike calls. They're buying to open the 2023 25-strike calls. I want to make that really clear here because that's really important. You know, when you see all this volume, and you know, these two volume open interests are pretty much identical. You know, it's pretty much looks like it's only these two orders down here, and I think this is the same person coming in here. These two separate spreads here, I think it's the same person closing all their contracts that they had open in these 5-strike calls, and they're going out another year and they're buying the 25-strike calls. So I like following somebody who is right. Obviously, they were right with these 5-strike calls because they sold them and they're super in the money. Now, you know, purely speculation here. I think what this person did was they bought these 5-strike calls probably during the pandemic or something because they were really smart and knowing that this stock was going to rally at some point. So, you know, I really like that trade there. Huge order volume, huge dollar amount. What I would like even more is to buy this one on a pullback. Now, as you can see here, from this 3-year chart, this thing has underperformed for quite some time. I do not know much about this company, but this thing has underperformed for a while. It has not made it down to this $5 level for almost like 20 years. Now, that does not mean that it can immediately go higher. I will definitely be, watching this one, keeping this one on my watch list. This is an oil play; it's a reopen play. So, I like the epicenter, the cyclical stocks here, that go well with this reopening. I would really like to buy this one on a pullback. It is pretty much hitting a new 52-week high today. So I'm a little, that's the only thing I don't like about this trade, is that we wouldn't be buying it on a pullback. I'm not in these options yet, but yeah, I will be adding this one to my watch list and probably be buying on a pullback because I do not want to be buying at a 52-week high. So next one I want to bring up is Peloton. Now I got to be quick about this one, or maybe I'll be long, whatever, screw it. So I am in these June 110 call spread. So I bought the 100 call, sold the 110 call. Now, Peloton had some really crappy news come out today. For those of you who are active in the stock market and follow Peloton, there was some recalls on their treadmill. A couple weeks ago, there were some videos coming out about kids dying using the treadmill or something like that. If anybody misuses a treadmill, it's pretty easy to get hurt on that. So, I kind of think it's, I'm not, downplaying the severity of, people getting injured and dying on these things, but I think it's a little bit of a overreaction here. There's a lot of bad news priced into this stock here, as we'll take a look at the chart in a second. But, there was some huge put volume and some pretty substantial call volume as well. Now, Peloton has earnings tomorrow after the close. The stock really does not perform well after earnings. That's because it's always ran up a lot before earnings. I'm taking the other side on this one. I'm just coming out and saying there's a lot of put volume here. People are really crowding into these puts here. When this stock was down 15% today. In my opinion, it's a little late. It's a little late to be buying Peloton. We'll take a look at the chart here. This does look like a classic Head and Shoulders here, which has me pretty nervous. This chart honestly looks pretty awful here, but I'm sticking with Peloton here. I like the company. People are going to be going back to gyms, but my gym has Pelotons. So people are always saying, oh, it's a it's a COVID stay-at-home play, but there are Pelotons at actual gyms, and people use Pelotons at actual gyms, not just using them at their house. So, Peloton is a very expensive stock. Even at these levels, it's not quite as expensive, but, this thing has had a huge pullback. They have earnings tomorrow morning. I think that they fixed some of their supply chain issues. I'm playing Peloton into earnings. I'm taking the other side of the trade on these puts. You guys have to know the stock, do your research, kind of come up with your own thesis about Peloton here. But the chart does have me a little worried. We're kind of doing a long video, but that's all right. One thing I would point out here is going back to 9/14 of 20, so last year, it does look like we may have some seriously good support here. We stopped on a dime at this 82 level right here, and that's kind of where we were finding support before we took the next leg higher to this 135. So Peloton here, I added to it today. I had some calls that I bought a couple days ago, so I did endure this 15% drawdown today. It was not fun, but it always makes it a little easier to endure a drawdown when you're buying, and definitely not panic selling. So thanks to everyone who's been subscribing. Sorry for a little bit of a long video. Just a lot of things to share on both of these stocks. I want everybody to understand that, because I think that was some good analysis that everybody should know how to talk about when especially trading options, because options are extremely risky if you don't know what you're doing. So thanks to everyone who's been subscribing. I really appreciate it. I'm trying to bring out some good content, so leave me a comment down below if you're liking the content. Make sure to shoot a subscribe if you like the content. Leave a comment down below if you've got any questions, and we'll see you in the next one, everyone.